Hello, friends. So today I want to talk to you about consumer psychology. I want to talk about President Trump, posted on Truth Social that he would not want companies to publish quarterly earnings. What should we make out of that? Is that good for us, bad for us? So I'll share my thoughts on that. And then I want to talk about some of the important data points that I've been writing down about the current state of economy and how am I making my financial decisions for the year end. So I'm going to share all of that with you guys. Some of you guys are coming to Wealth Summit. You already purchased the ticket, so congratulations. Some of you guys haven't purchased your ticket yet. Maybe you're thinking about waiting till October, which I don't mind. You can certainly do that, not a problem. But please try to do that now, because if you do it now, you get that free planner for 2026. I think that's a lot of value. You can use it. You can have your kids use it, or maybe give it away as a gift. And by the way, if somebody wants to buy multiple planners, right now I'm in process of ordering them. So if you want to give those away as a gift, reach out to me. If you're a vendor, maybe you want to put like a one pager inside the planner that can help me offset some of the costs so I can print more planners and perhaps give it away to people, then please reach out to me as well. Again, it's not a profit making venture for me. I just do it because it's so important. When you write things down and you execute on those, you're just going to see much better results at the end of the year. So that's the plan with the planner. So let's start out with consumer psychology. So there's two type of things going on always: savings mindset or a spending mindset. You can think about in your own family, what kind of mindset do you have right now? Are you thinking more about spending, or are you thinking about more saving? Because that can tell you what kind of economy we are in. Now you expand onto it, you take a look at your local community and see what kind of mindset are they in. Then you go further, what about your state? What about the country? What about the world? And you start to get the picture bigger and bigger. And then obviously we can collect some of the data points to help us with that as well. Now, one thing to remember is, for example, I've been talking about this in a greater detail in the coaching program the entire year, is that shifting the mindset from savings to spending is not that easy. Okay. And similarly, from spending to saving is not that easy either, because you kind of get habitual to doing that. So keep that in mind. So why am I telling you that? Every now and then I see a chart that shows that Americans' money on sidelines is 5 trillion, 6 trillion, 7 trillion. I think right now it's about 7.5 trillion. So a lot of people are in the savings mode. Why is that number keeps growing? Because it's difficult to go from savings to spending. Once you get a habit of saving, it's very hard to do that. So that's number one. Number two reason is, a lot of people who were been working for 20, 30 years, and now they're baby boomers and they're retiring or they're already retired and whatnot. These people don't want to take as much risk in the market anymore. They want to sit on sidelines. And, last few years, I don't blame them, because they've been earning 4 or 5% in the money market fund. So why take the risk at all? So that's another reason why you're seeing those numbers go up. I'll give you another example. Take a look at China, for example. One of the main reasons why United States is pushing hard on China is because China is mostly exporters. They export and then they save. Right? You probably have noticed what happened with real estate, right? A lot of people were talking about that people are coming from China and they're buying all bunch of properties in Bay Area and other places on cash. Why are they able to buy it on cash? Well, they're able to buy it on cash because they are heavy savers. So I can't blame them for that. I mean, that's just the psychology they have. On the other hand, if we take a look at the United States, and we don't see the similar psychology. Our consumers are heavy spenders. That's one of the arguments President Trump and his team has been making, that we are the buyers. A lot of people from around the world wants to come to the United States and sell. Why? Because we are heavy spenders. So when do we become spender? When does a country become spender? Well, country becomes spenders when there's a high consumer confidence and there's high cash flow. Now, if you take a look at this market, for the entire year, now it's starting to shift a lot more, showing a lot more positive consumer confidence. But over the last 1 year, we have seen all the surveys been telling us that consumer confidence is not as good, showing fairly bad. Similarly, if you take a look at the big sharks, people who are institutional buyers, their confidence was not that high in the market either. But the second part of the equation, the cash flow, the earnings, that surprised everyone. The quarter one was really great. The earnings were there. The cash flow was there. Quarter two, earnings were there. Cash flow were there. And now most of the issues are starting to resolve. So a lot of these, consumers as well as institutional investors are starting to change their mind. They go like, you know what, maybe just maybe, we're still in a spending mode. And I'm going to back it up with the data pretty soon so you can start to see what's happening there. But keep that in mind going forward. I think a lot of people missed out on many opportunities this year because they were in a savings mode rather than spending mode. So, meaning when I say spending mode, not necessarily go buy this stuff, I mean more like an investment mode. If you take a look at US economy, for example, since COVID, it has gone up and down at least few times. And I have clients who never even invested even after COVID. Why? Because they sold out and then the stock market went up and they go like, oh my gosh, too up. I don't want to get back in. Okay. In 23, we saw the same thing. This year again, in April, we saw the same thing. A lot of people just sitting on the sidelines for waiting for this economy to crash because they don't believe in it. But the truth is, if economy can take so many hits and still run strong, that means that economy is very resilient. Now, yes, one day something will shock the economy and I will be proven wrong. Okay, one day. But until then, the market will continue to go up. Until then, economy will continue to thrive. We take a look at the AI spending right in the market. It's crazy. I think $500 billion going to be spent on just the data centers alone. That's a lot of money. Along with data centers, what happens to all the plumbing? What happens to the electrical? What happens to the cooling systems? What happens to technology? What happened to people who work in all of those fields? I mean, that is going to fuel a lot of growth. Similarly, we're seeing a lot of investment in infrastructure. Then on top of that, President Trump is focusing a lot on bringing manufacturing back to the United States. I know this issue gets political. All I'm trying to show you is a lot of activity is going on in the United States right now, and we're going to start to see all of that come in 26 and 27. Now, you might say, well, that all sounds good, but president is taking away the transparency. And the reason behind that is because President Trump posted on Truth Social that it's not really a good idea for having companies report quarterly earnings. And some of you guys reached out to me and says, well, that's pretty bad because if quarterly earnings goes away, how am I going to make my financial decisions? I may continue to hold on to a company that I should have sold otherwise. So that scared some of you guys. So let me share some of my thoughts around that to bring you a little bit more clarity. Number one, let's assume, for example, you're not a big company. Maybe you're a small business. Maybe you have a gas station or you run some sort of services business or whatnot. If there was a requirement that you need to do some sort of reporting every quarterly. Well, that's good for me because you guys will come to me having to do that kind of reporting and now make more money. So it's good for me, but it's really bad for you as a small business owner, right? Because it's taking you a lot of extra work to compile all of data. You guys know when you file your small business tax returns, how much time and effort it takes you to put all that data together. Even throughout the year, you got to manage the QuickBooks, you got to build the balance sheets, you got to, deal with cash flow, the income statement. It's a lot of time and effort goes into it. But if you're a larger size company, the problem gets even bigger because now the numbers are big. You need to compile them, reconcile them. And then SEC have so many regulations that you need to be very, very good with accuracy. You need to present that information in the correct format. And then on top of that, we have earnings call, then we have presentations, and then we have to do Q&As. I mean, the truth is, it does take a lot of time and effort. So doing all that work is very laborious in nature. And then on top of that, it takes time. Now you might say, well, who cares, right? As an investor, I need to know that information. Well, maybe not. So let me explain to you this way. See, what happens is a lot of people lose more money in the market than they actually make. Why? Because they sell out of a particular company a lot sooner than they should have. We have seen that over and over again, at least in my career when I'm talking to clients. Like, for example, how many people sold out in April this year and they were not able to get back in? How many people are still sitting on cash and waiting for market to crash? Right? Problem is nobody can predict that. Nobody knows when the market goes up, when the market goes down. Those are very, very hard predictions. It's just so much easier to deal with things as they are happening and making your decision based on that. So what I'm trying to say is if quarterly earnings goes away, and let's say they're 6 months or annual earnings, I think more people going to become a better investor. Why? Because they're going to start to think a little bit more longer term. They're not going to panic every single quarter and going in and out of trade. Honestly speaking, I think we're going backwards in terms of investments. I'm seeing a lot of kids making crazy bets. For example, on a lottery stock, they will go out there and put 50% of their portfolio. I mean, that is just crazy. And I see that on a tax return. And sometime when a kid comes in and they made $1 million, that worries me because this was a lottery kind of a stock. And next year they're going to lose a lot because they're not really using some of the sound financial principles to protect themselves. But similarly, many people go in and out of trades just because of quarterly earnings. So I think if the earnings were at least 6 months, maybe people will stay a little bit longer in the trade. And hopefully within those 6 months, company can improve and most likely it will be better outcome for an investor. So from a company point of view, it saves them time and money and a lot of energy and a lot of PR, honestly, at the same time. From an investor point of view, I think it's going to convert short-term investors into a long-term investors, which is going to be a better outcome for a lot of people as well. So it's actually not a bad idea to go that route, in my opinion. Whether that happens or not, who knows? But I'm just saying that. Let's talk about some of the data points. So like I said earlier, that US economy is actually quite resilient. I mean, think about it. We took a major shock from tariffs. There was we bombed earlier the nuclear facility. I mean, can you imagine bombing a nuclear facility, how big of a deal that is? What kind of drop we should have expected in the market, but we survived that. We survived COVID. We survived so many shocks in this market, and this market is still holding strong. Okay. But let's take a look at some of the recent data that we got. So retail sales. So retail sales, the August retail sales rose 0.6%. Expectations was 0.3%. What is that telling you? People are still spending. In matter of fact, back in July, numbers were revised upward as well. So 0.6% from June. So that worked out in our favor as well. And then if we were to exclude auto and gas, then the numbers actually climbed to 0.7%, beating expectation, which was about 0.4%. So in the last discussion call, I think somebody mentioned that, hey, people are not spending. That is actually not true. People are spending a lot. What about online shopping? Online shopping was up 2%. What about clothing? A lot of people worried about, with tariffs and all that, prices went up. Maybe people are not spending on things like clothing and shoes. Well, clothing and shoes was up 1%. So, spending looks good as well. But not everything is good. There are some concerns that I'm watching out for. For example, we take a look at the earnings growth. The average earning growth is at flat at this point. We want to see some earnings growth, but that's not happening. So whenever your earnings growth is not happening, what does that mean? That simply means that the economy is not as strong, right? So keep that in mind. Then we have inflation problem. So inflation problem, like I've been saying that for a year or so now, that this whole 2% rule might not actually work out going forward. And there are a couple of reasons for that. And one reason is we have a huge debt. So high interest rates and debt problem, that's not really good for the country, right? So we have to deal with it somehow. And one of the easiest way to deal with it is by having a growth. I mean, think about it, you as a household. So let's say if your income is $100,000, maybe you have a debt for $50,000. Yeah, you can start paying down that debt, but that is going to be very painful. The easier way to do that is to increase your income from 100,000 to 150,000. Well, how do you do that? Well, you do that by improving your knowledge. Similarly for investment. So for example, let's say you on average, you're able to do 10%, but you would like to do 20%. What's the easiest way to do that? Follow somebody's stock picks? No, you need to go out there and learn finance. How you learn it, that's up to you. You can use books, podcasts, YouTube. There are all kind of news programs these days that talk about finance. So all of those there, obviously we have a coaching program, you can join then. So all bunch of tools out there. But my main point is you need to expand your knowledge. That's how you take care of debt a lot faster. And that is what United States needs to do. We need to grow out of this debt problem. If we can grow our economy, if we can help our companies grow faster, I think we can deal with some of these challenges out there. So inflation is still sticky. It's not going away. I think in matter of fact, my expectation is inflation will continue to go up, maybe 4%, maybe even 5%, unless we get that productivity gain coming out from AI or something like that to offset that. One of the things that is really helping with inflation right now is immigration policies, right? A lot of people have left the United States. So that is also kind of helping a little bit with the inflation. But if all the people were, exactly the same as the previous year, I think we would be seeing a much more painful inflation. But when interest rate comes down, whatever extra we are paying in inflation, I think that will get offset by those interest rates. So I'm not really so much worried about that as well. So credit card balances are at record high. What is that telling you? That means people are borrowing. Why are people borrowing? Well, they're borrowing because they don't have enough money in their checking account to pay for their bills. So that does get me worried a little bit. What about delinquencies? Delinquencies are rising as well. So again, another pain point. More households are now making minimum payments. That worries me about the economy. Okay. National average credit score has dropped the most since 2009. Can you believe that? What is that telling me? That is telling me people are not able to make up for pay their bills on time. So that's also concerning. The truth is, top 10% of Americans account for nearly half of the spending. So hear that out. 10% of Americans are responsible for spending half of all the spending. And this is highest since 1980. So if you think about it, one way to look at it is right now in the United States, we have two economies. We have the top 10% and we have rest of the 90%. So a lot of people in the lower earnings group are suffering. But people who have wealth, people who own real estate, people who have assets, they are making a lot of money. In matter of fact, right now, I think going forward for next 2, 3, 4 years, people who have money, people who have assets, they're going to continue to make more money. Now, I want you to imagine this just for a second. Somebody worked in this country for 30 years. And now they're in their 60s, maybe in their 70s. Maybe they have $3-4 million sitting in their 4K or Roth account or something like that. Maybe they have another million or 2 million sitting in their brokerage account and they have a couple of properties. If we grow at 5%, 6%, that means most of their portfolio are going to go up 15 or 20% per year. That means in next 4 or 5 years, their wealth will actually double. What are they going to do with all that wealth? Only two things. Either they can spend in economy or they can pass it on to their kids. So we're going to see that. I think the spending problem is, yes, it is painful. So when you go out there, you're going to feel a lot of negative comments from people. People are going to tell you it's painful. And I agree with them. It is painful. But keep this in mind that we have enough people who are retiring, who have a lot of wealth, and they are spending a lot of money. So let me give that fact back again to you. Top 10% of Americans are responsible for 50% of spending in the United States. So let that sink in next time you're worried about spending in this country. Okay. Now, that brings me to today. So obviously, Feds are going to announce what do they plan to do with interest rate cut. What we do know is right now we have a soft labor market and we have moderate spending. It's not like people have stopped spending and the economy is stalling or anything like that. So this puts pressure on the Feds to cut rates. Obviously, the market is expecting at least 0.25 rate cut, but how market behaves going forward is going to largely depend upon the language used by Jerome Powell today. Now, is market going to rally a lot because we got 0.25% rate cut? I doubt it because that is already built in, although some of the risky assets might see the rally. I think we have to watch out for how Jerome Powell talks about unemployment and labor market. If he spooks the market, makes it sounds like, oh my God, we are heading towards bad unemployment in this country, most likely we're going to give up some of the gains that we made in month of September. Now, remember, usually September is a negative month. We should not be up for the month. Some of us who have individual stocks, maybe we're up 5%, 10% in the month of September. We shouldn't be doing that good. Okay. So we may have to give back some of those gains. On the other hand, if Jerome Powell comes back and says, you know what, I think we can manage it considering what the immigration policies looks like. Unemployment, I think, is manageable. We're going to slowly, gradually start decreasing the interest rates to keep the economy pumping. especially if he adds comment to President Trump plan. If he happened to say, you know what, I think President Trump is doing the right thing and economy is on the right track. If something along that line, if he says that, I think that is going to give a big rally. But regardless of what he says, I think over the next 4 months, 5 months, 6 months, I think market is going to do just fine. So that's my take on what's happening in the market. Hopefully you found that information handy. And if you agree or disagree, then please leave it in the comments, or we can talk about it in the next discussion call. This Saturday, I will be in Bay Area on actually Friday and Saturday. So if you guys want to get together, then message me. We'll put something together. Maybe we can do a local meetup on Friday night, maybe, and talk about what's happening with the market in person. All right. All right, guys. And as usual, thank you so much for spending time with me. And don't forget to register for the Wealth Summit if you haven't done so already. I'll talk to you soon.